5, 4, 3, 2. All right, folks, we're live. Red to Block Academy, Werner and Mario. And today we are discussing a few real pivotal things that are essential to knowing in this current economy. Number one is, what are these medical mandates doing to our economy? They're, in our opinion, my opinion, they're having drastic effects to the downside for what we're dealing with nowadays. And then number two, why are all the big guys selling their shares? And a lot of them are referring to the selling of their shares as, oh, I'm doing it to get my financial house in order, something along those lines. Mario, what are your thoughts?
I'll start off with, I don't think this new variant's going to be as big of a deal as like Delta, or even less of a deal as the coronavirus. I think as a virus mutates, it becomes less deadly. It becomes more contagious. So it wants to spread. It mutates to be able to spread easier. So I think it becomes more and more like the common cold, and it's less deadly. It doesn't want to kill the virus. Doesn't want to kill the host, because then it can't spread. The goal of the virus is to spread, not to kill the host. So this new variant out of South Africa, Omicron. Is that right, Warren?
Omnicron. I think that's correct. Yes.
Interesting name. I think it's a 70s sci-fi movie, same name. So interesting connection. Aliens, sci-fi, dimensions. Interesting that that's the name they pick. But I think this is going to be a big nothing burger. What are your thoughts, Warner?
It's never about the virus. The virus, if you look at the stats, what it kills is very low. I mean, those are the facts. You try and argue with me all you want, but it kills a very small percentage. I'm not concerned about the virus. I'm concerned about the message. The message is the true virus. That's what people are missing. It's not
right.
It's not the virus. It's not the sickness. It's the message. It's the fear that's coming in. And the reason Mario and I are talking about this, because this whole channel is focused on how do you avoid financial destruction. We're talking about this because there's all these shiny things that people that run these media channels and the banks in the world, we're not going to get into all that, but maybe we'll go on to another channel, discuss our true thoughts and all that. But on this channel, whoever's running the show is throwing, I want you to imagine they're throwing like flashy pop-up ads in front of you in your normal life. Just pop-up ad, pop-up ad, pop-up ad, whether it's fear this or Epstein this or debt ceiling debacle, right? They're still going to keep going in the same direction, their plan. What I want you to think about is to be aware that the pop-ups are coming at you, like all this media. Just be aware so you can kind of see what's coming down the pipe. But I don't want it to dominate your life, because if it dominates your life, then you're taking mental effort focusing on that versus focusing on creating money. And at the end of the day, whether it's creating money or creating wealth or doing your plan B or creating resources or homestead, the more time you're focused on their shenanigans, the less you're focused on your livelihood. And that's what's the most important thing. So that's the key message here. Tune out the noise, take the bits and pieces, but don't let the fear and the distraction overcome you. Focus 95% of your time on executing on your local plan.
I agree with you, Warner. I think the most damaging part of this is the fear that, and they're selling fear because it's economically profitable to sell fear. You're getting advertisers, there's getting eyeballs and attention, saying, hey, the common cold are very similar to this new variant. Is you're going to have a sore throat, a cough, a headache. That's not really going to sell advertising, but freaking people out is. But that has a drastic economic impact on the economy when folks are freaked out and they're not wanting to fly, they're not wanting to go to restaurants, they're not wanting to travel, to take trips, to go places, movie theaters. That's having an impact on the economy. So I think you're right. I think the variant itself is a big nothing burger. I think the outcome or how they sell it and pitch it could have a massive impact.
Yeah, so that's how they control you. There's two realms in which you can operate. Talking about mindset now, is you can operate in fear, or you can operate in what's possible. And I've talked at length with Mario about all this. When you're operating in fear, you're operating, if you really look at the language in your head, you're operating from the past. And when you operate from the past, guess where you go? You get held to the past. So wherever you are in your life, whether you grew up poor or you're hitting these obstacles or you don't think you can be successful, you're going to stay exactly where you are. And that's where they want you, exactly where you are. How do you break free from that? Well, you make a choice in your language to go to the future, to what's possible, to your plan. And the simple way to do this is I just said the keyword plan. You either have a plan for what you're creating, or you're going to fall into this default fear that they know. See, these guys that they run these media channels, these banks, all these global corporations, they're masters at language, and they're masters at triggering you and getting you to stay in this fear-based kind of thinking. And when you're in fear-based thinking, you're not in positive forward possibility type thinking. So what you're doing is you're just executing on worry, and you can't be doing both at the same time. Either you're going to be worrying or you're going to be executing and taking action to the future. And our goal here is, one of the pitfalls that will destroy your wealth the quickest is actually fear. We don't talk about it a lot. Yeah, it's poor financial decisions, but it's actually fear, where you're like, oh, I'm not going to make it, so I'm gonna live like a baller. I'm gonna live life to its fullest because I'll never get there. Why not just live it, go into debt, screw myself? That's fear. Fear leads to very poor decisions because you're not thinking clearly. When you operate in the future and possibility from a plan, then you're taking action on your measurable results. My goal is to make $1 million. Okay, well, what actions are you taking? Okay, were those actions effective? Were they ineffective? That's where we want you in this channel, taking effective actions towards your goals, not focus on fear. Any thoughts on that, Mauro?
Yeah, I turn the media off. Turn the negative. You're being sold advertisement. What I like to do is get into YouTube or get into other BitChute, get into other media channels. You're getting the same information, but you're getting people that are not selling you. They have no agenda. The news, the mainstream media has an agenda to sell advertising. Period. That's what their whole business model is, to sell more advertisement. And you're being manipulated into stay tuned. And you're right, they are masters at creating and crafting a message. They go to like University of Northwestern, a marketing school that literally has like teaches you witchcraft. They literally teach you broadcasting and message manipulation and how to manipulate words to get the greatest effect on people. I went to school there. It's very powerful what they teach and how they've researched it, and they do tests, and they look at words and how they affect people and how they structure a message. And that's what you're getting. Those people, Rachel Maddow, Sean Hannity, the people at the biggest mainstream media outfits are masters of creating a narrative and a message and fear and driving advertisement. At the end of the day, that's what they're selling, is more advertisement. And to do that, they need attention and eyeballs. Going back to words, Warner, what we can do in our personal life is remove, like you and I catch ourselves saying we have to, or we need to, or we must, and replacing that with I'm going to choose to do this. And that's more powerful. That's saying that you have a choice in life versus I need to. That's a very weak position. If you need to do something, that's a requirement that's out of your control. If you choose to do something, it's much more powerful, and you're taking action. You're empowering yourself and taking action by choosing to do something versus using the words "I need to." You're a slave to that word. You're beneath this requirement. This requirement's outside of your control. So those psychological tricks or those psychological tools makes you a stronger manager, makes you a stronger leader, makes you a stronger entrepreneur.
Yeah, and so I don't get smoke checked on what you just said. In the last podcast, I said a bunch of, you need to do this, you need to get your house in order. I was coming from a situation of, my goal is for you to create this in your life so you don't get caught here. But I was coming from survival. That's why I was using need. And so we all get caught in it. Right?
And when you hear someone say that, just replace that with, I can choose to do that. I don't need to do anything. That's very powerful. When you put that mentally, when we say you need to do this, just replace that word. When you hear someone preaching that into your life, you need to mentally go, I don't need to do anything. I can choose to do that. I can choose not to do that. I don't need to do anything. I'm fine. I'm fine. I'll be fine. The sun will come up tomorrow. The sun will set tonight. I'll be fine. There's oxygen. There's food growing all over this planet. There's clean water. I'll be fine.
And what Mario said is really important, because when you say, I choose to do that, it kind of pauses everything. It gives you some breathing room. Here's an example. This is what the individuals on on media are going to use against you. They're going to use problem, reaction, solution. The world's falling apart around you. They're going to take all your money. You're going to be broke and penniless. Oh, react. Oh, we have a way that you can overcome it. Invest in Bitcoin. You see, now when that type of message or any other type of message, problem, reaction, solution comes out, you go, hey, I have a choice here. Do I need to make, do I require to make this choice right now? No. Can I have a choice to think about this? Yes. When you have a choice and it's not this reaction, then you'll start making better financial decisions because, I'm about to go broke. Oh God, my life's never going to turn around. And the solution's Bitcoin. And like,
okay, so you're triggering now. You're triggering me. Yeah, Matt Damon's trying to sell you on. It's a platform that you can buy. It's like crypto.com or something.
Yeah, crypto.com. Yep.
Man, and he probably owns a piece of that. Now you're triggering me. So on Friday, let's do a post-mortem, Warner. On Friday, the market crashed 900 points, which used to be a big number. Now it's like a couple percentage points. What went down? Virtually everything went down, including cryptocurrency. So it was not a store of wealth.
Oh, I didn't watch it.
Was not crypto. Oh, crypto crashed. So what didn't crash? What were the two assets or the two classes of assets that didn't crash? Bonds, not like corporate bonds, not junk bonds. I mean, U.S. bonds. I mean, like the safest investment in the world didn't crash, and gold, precious metals. Those were the things that people ran to. So as the stock market was crashing and cryptocurrency was crashing, gold and bonds were the two asset crashes that maintained their value on Friday. So if we see a big move, let's say 50% down, don't think for a minute, folks, that cryptocurrency is this store of wealth. It's not. It's the most volatile asset class, not the least.
I didn't realize. I wasn't even watching it. It went down.
It's the most volatile asset class, not the least volatile.
So let's talk about that. Let's get in to crypto. Why did crypto? So anyone who's listening to this podcast right now, why did it go down in your mind?
Because it's trading as a speculatory asset class, not as a coin. It's not a coin.
You made up a word, speculative.
Speculative? There we go. Speculative.
Yeah, so go ahead. I didn't mean to jump in your train of thought there. But get into the details of it, step by step, action by action. Stock market goes down. What causes crypto to go down?
We have information that there might be more shutdowns. The economy might be hurting. People might be out of work. GDP might be going down. It was negative news on Friday, or really came out, I think, because I was at your house for Thanksgiving. I think it was actually out by Thanksgiving evening, the South African virus, or the message, the energy. They were pumping this energy. I would say Friday was one of the most light trading days in the entire year. The Friday after Thanksgiving, the stock market is open in the United States of America, but it is a very thin trading day. A lot of people are shopping for Christmas gifts. A lot of people have the day off. A lot of people aren't paying attention. They're not trading. So we have super low volume of actual trades being placed and being transacted on a Friday. So the fact that we got that much downward pressure in a day is pretty surprising on a light trading day. Not a lot of assets are trading hands, or it's a very limited amount of volume. But what we saw was crypto went down as well. Crypto was tanking based on the fear. It wasn't where people were running to safety. It was people running out of crypto to another asset class for safety, bonds and gold. So it was not the safe haven that people thought it is, or it's advertised as this store of wealth.
Wait a second. This is a really interesting point, because who's actually running from crypto and who's staying in it? To me, it seems like the people that have bought into the advertisement that it's a store of wealth are just sticking in it. But then who do you think's running from it? Because you can't just execute on crypto. It seems to me like the ones that may be executing, this is just complete hypothecation, are the individuals that know how crypto works, and they're leaving the system for some reason. But the regular mom and pops that are in crypto, retail investors, are they moving that quickly out of it? This is fascinating. Any thoughts on that?
Not sure, Warren, which direction people are. I'm not sure which class of investors were moving out of it. It's not an investment; it's speculation. So,
well, yeah, not invest, yeah, but which group of speculators which group of speculators? This is fascinating to know, because if you let's just say, for a hypothesis here, if you have all the retail traders are like, oh, crypto is just great, I'm just going to ride it, it's store of wealth. But then the guys that really know what's going on, they're going, ooh, the market's going down, I'm going to take some chips off the table. That would be fascinating to know.
And also there's leverage positions that might be being triggered that are executing to clear that position, or to make sure that person has enough. Since the price wasn't going up on Friday, it was going down or had a little bit of a down. That's triggering selling if they're highly leveraged positions to try to meet.
Do you realize what you just said? If that's the case, crypto is going to get absolutely, because what happens to the market?
It's the most speculatory. It's the most speculative asset class.
Yeah.
Speculative asset class. I'm having trouble with that word today. It's the most speculative asset class that there is. It's not the least. There is the most amount of speculation in crypto, not the least. But it's sold. It's kind of marketed as a store of wealth, where get out of this fiat, get away from the dollar. The dollar's trash. Cash is trash. The dollar's gonna be worthless. Go into crypto. Get into crypto. It's safe. That's the safe play to store your wealth instead of these fiat currencies. And the reality was, do we see the dollar drop on Friday? Dollar's really strong right now. Go look at the Canadian dollar. We're getting 120 cents on a dollar traded into Canadian currency. So the dollar didn't drop on Friday. It was cryptocurrency that dropped. So what they're selling you and what the reality is absolutely 180 degrees from the truth.
So that's not a good sign. If you're paying attention, I don't follow crypto because I'm not in it, but that's not a good sign, because if you look at most major stock market crashes, it's usually the leveraged positions that get the thing going. It's usually it's okay.
That's right.
Yeah, it'll
because that's triggering. It's triggering another one. It's a domino effect. As it's trading down, it's causing people to have to sell positions to meet margin calls because they're leveraged. And that's triggering another one and another one, another one. It's clearing out all that leverage, those leveraged positions. Those are the people that those are forced sellers. Mom and pops that aren't leveraged, or people that have used it as a store of wealth that are not leveraged, they don't have to sell on Friday. Who was forced to sell on Friday? If I had to guess, it's the leveraged positions. As soon as it trades down, as soon as a couple people hit sell, so it might have only been down. It might have only been down a fraction of a percent. Because there's so much leverage behind that fraction of a percent movement, it's causing it to go much further down because of margin calls. You have to have the liquidity, or you have to have that backing, a small part, a portion of they can liquidate your portfolio to meet that margin call.
So that's something that not a lot of people are talking about is how do you have
leverage on
on a stable store of wealth? How the hell is it leveraged to the hill? I mean, gold, I guess you can, I don't know, I guess people
you can take out gold. A contract. Yeah, absolutely. You can take out a contract at the Chicago Board of Trade on anything. So you could you could hedge the price of gold. There might be a legitimate reason to have a futures contract or a hedge on gold if you have industrial use of it. You make gold teeth, or you have some requirement for gold. You might want to hedge against the price going up or down, or et cetera. But that's not the primary use of. That's not what most people are doing in crypto. They're not saying, well, I need this crypto at this price, so I'm going to put a leveraged position on it to guarantee an outcome 6 months from now.
The thing that really shocks me about, and I know we're going off on a tangent here in crypto, but it's a good one. The thing that really shocks me about crypto is I've heard it from YouTube commentators, the big name guys. I'm not going to name names, but over 300,000 followers, one guy. And then we heard it from individuals we've interviewed on this channel, on this podcast, that it's like they just say this nonchalantly, like, oh yeah, you can go 4x leverage, 10x leverage.
Right.
But it's like the way they say it, it's so nonchalant, like, oh yeah, you can just make money by like loaning it out or leveraging it out. And you're like, wait a second. What is any difference between that and going leverage on any other type of asset? And it's just like crypto so insanely just, it's
a massive bubble. Massive, huge. There's so many speculatory positions there's so much speculation. There we go. So much speculation.
Speculation. Yeah.
It's an absolute, it's the opposite. It's the absolute opposite of a store of wealth. That's not what we saw on Friday. That truth statement, if you're trying to sell a truth statement that crypto is the safe place, that's the safe play right now, is into crypto. What you saw Friday was the exact opposite of that in evidence. The evidence does not support that.
All right, guys, you've been warned. We're at about the 20-minute mark. Should we do 5 more minutes to discuss why the big boys are selling, or leave that one for another day?
Well, just to kind of whet people's appetite for that discussion, we saw Satya Nadella. I hope I'm pronouncing that guy's name right. I'm having trouble with words today. Satya Nadella. He's the CEO of Microsoft. He has about 500 million, or he had about $500 million worth of Microsoft shares. I think he's worked there for over 20 years. And obviously he gets part of his compensation. The majority of his compensation is in stock options. He sold 50% of his holdings. So he cleared out over $250 million in Microsoft stock. Now, Washington State is imposing a 7% income tax on capital gains next year. So it might be just a good time for him. Elon Musk he's sold all his houses, and he sold a bunch of Tesla stock, and he's going to try to cure hunger overseas. But now we're seeing data points. We're seeing this kind of as a trend of people. Bill Gates has sold some positions.
Mark Zuckerberg's been selling stocks every day for a year.
So what you're seeing now is it's a good time. You can't argue that you're not fully valued. There's very few companies that you can make an argument that they're being properly valued in the market. So it's a good time to sell. Obviously, the CEOs, and who better to know if something's overvalued or undervalued than the CEO of a company.
But here's the difference, and we talked about this before, that most people will miss with the difference between Elon Musk, Bezos, and Zuckerberg selling. None of those companies pay you a dividend. So you're not getting paid on your stock.
That's right.
And this is a key differentiator, because if you go look at the financials of Microsoft, which I have and Mario have, that is a phenomenal. I mean, the debt to liabilities, I think I looked at it, if you took all their cash positions, paid down their debt, then took their net income or free cash flow, they could pay off all their debt in 0.8 of a year. So if one is 100%, 80% of that year, they could pay off all their debt. That is insanely phenomenal. So the question you really have to ask, if this CEO is a really smart guy, what is he doing in his head? See, most people don't think this way. What is he doing in his head? What is the thought process? He's going, if I had to guess, he's going, I have whatever 300 million, 400 million.
It's 500. He had about $500 million worth of stock in Microsoft, and he sold half of it, or a little over.
So he has 250 million. Now the guy's going, depending on when he bought in, right? He's getting a certain dividend cut on that money. Let's say $250 million. So let's say it's like 5%, right? Let's just average it out. 5%, 250 million. That's 25 million divided by 2. That's $12.5 million every year just for sitting on it. Now he's going in his mind going, well, I'm going to take a little cash off the table, because can I take that $250 million and get more? This is how Mario and I think. This is how everyone else thinks. If I have $250 million in equity somewhere and it's making 5%, can I take that out and possibly in the future make 10%, 15%? If he's thinking that way, that's sending off a massive red flag of one of the best companies in the world that's got one of the lowest debt loads, that pays you to own it. And he's going, I might be able to get a better deal. Whoa. Pump the brakes. What the hell is going on here?
Right. Yes and no. So I'll kind of counter that. He's probably getting about 2% off those shares. You're right. He's saying, I'd rather park this money and get 0% than to take the chance of losing this much value, because I can buy back in. If Microsoft drops by 50%, he comes back in, and now he's doubled his amount of shares that he had for that 250 million. That is a definite possibility. Now he still owns he didn't sell the whole position. He's not he's not negative on Microsoft. I would,
But
I'd have
he's taking $250 million.
off the
He's like
table.
off the table. That's
Right.
not, that's a
But he didn't
lot of
sell the
money.
whole thing, nor can he really. But he could have sold more. He could have sold 80% of it. He could have said, I'm going to go do philanthropy and take a bunch off the table. But he sold half of it, which is also a bet that he still thinks it's a long term, it's a good business long term, because he kept a huge chunk of it in Microsoft. But you're right, Warner. It's a big signal. He's saying I'd rather park this at 0% interest in a brokerage account in cash and cash equivalents, short-term bonds. He'd rather park it in cash than be in Microsoft at this valuation. It's telling you something about the market. It's telling you something. This is a good company. It's not, I don't think that you're going to have bad quarterly results or bad yearly results, next quarter or next fiscal year, but it's a signal. It's a signal, just like Zuckerberg, just like Bezos, just like Elon Musk. It's a signal that these companies are properly valued or overvalued.
Yep. So some things to think about, guys, because Mara and I have done this in our own lives. Me at a higher level than Mara in terms of taking some money off the table and putting it into hard assets that I can control. I'm doing the same thing that CEO is doing, but and I also have cash. Mara and I have cash stacked up, but at the same time, we're constantly, as if you want to grow your wealth, you want to constantly you never want to be sitting still. You want to constantly be thinking about, how do I take this? Is it working most efficiently here, this value, or can I take this value and put it over here and work more efficiently? That's what great investors, great business people. And here's the thing, guys, you don't need to be, this is a misconception. You don't need to be a billionaire to be a great business person. If you're making $1 million a year or you're worth $1 million, you're a great business person. You're better than 80 to 90%. Not better, you perform more effectively than 80, 90%.
99.999.
99. So let's stop focusing on, like, we focus on these guys at the top because they're publicly available information. It's hard to get information. The guys worth 10 million. So we're just looking at the guys that are like the sitting ducks. We can see what they're doing, but don't discount if you're at, like, you can think the exact same way as a billionaire at $1 million. That's the point.
That's right.
So
I think we'll land the plane here, Warner. It's good talking to you.
Okay. Thank you guys for listening. We appreciate your time. If you're not a subscriber, please subscribe, like, comment. That gets this message out to the world, helps others create financial freedom in their lives and avoid the financial pitfalls that lead to financial destruction. Thank you guys again, and we look forward to connecting with you in the future.